Generon, DocuSign. I mean, it's almost like we're going back 6 weeks or 8 weeks. That's sort of the mood right now. What do you think's driving it?
So, Carl, I just think that the market has detached itself from the economy in a way that's really great for investors. You know, the Fed has been incredibly accommodating, and we're living in a time where if you pay attention to the news on a daily basis, there are a lot of things to be worried about. But if you pay attention to money flows and liquidity, it's a good time to be an equity investor.
I assume you think that environment is not ephemeral, right? Given the guidance from the Fed yesterday, that overall envelope of protection is going to be around for a while.
It is, but I don't know that the Fed has the tools to protect investors against the kind of economic issues that we're dealing with right now. I mean, quite obviously, if we're going to sustain demand, we're going to have to find some way to keep the buying power of all the people who've lost their jobs over the last, 10, 12 weeks. We're going to have to keep them in pin money, and that's going to require additional stimulus. It's going to require extending unemployment benefits, because at the end of the day, we have more than 40 million people who filed for unemployment benefits, and that is a significant drag on demand, and it's going to be bad for the economy eventually. And there's only so long, I think, that the Fed can keep pumping things up in the absence of actually getting those people back to work. And there are signs that we're trying to do that, but we can also see that COVID hasn't gone away, and so that there's going to be a big spike. I think it's already begun in infections, and whether that is something that slows us down or not remains to be seen.
Roger, good morning. It's John. I wonder, from where you sit, is the startup tech ecosystem following more the economy or the markets? There's all this talk about layoffs and whatnot, but I wonder, maybe the investors feel a bit richer because the markets have held up and they're not pushing as much for cost cuts, or have the customers dried up and is that need for cash still there? So are startups really tightening the belt?
So startups have to tighten the belt. The private companies that aren't, flush with 3 years worth of cash have to be incredibly careful, because we do not know what the funding environment is going to be like going forward. I think venture investors backed up very, very, very significantly. John, I think the really important question that venture investors have to be asking now is, what is all the news going on with the big guys going to mean for startups? For example, IBM and Amazon have both announced that they're not going to be selling facial recognition software the way they were for at least a year. In Amazon's case, it's for a year. IBM's basically said they're no longer going to sell the standard package of facial recognition. If that is, as I believe it is a response to political pressure, and if you start to see changes going on relative to Section 230 of the Communications Decency Act, which has been the safe harbor for internet platforms, those are actually going to create opportunities for startups, because they're going to realign the rules of the game.
Roger,
and if I were a venture investor, I'd just be paying attention to all that stuff, because it's going to tell you where to go.